Continuation and reversal patterns are key tools in technical analysis. They're used for predicting when a trend will continue on its current path or change direction. So what are the key patterns to look out for and how do we interpret them? Joining me to discuss is technical analyst Rajan Dhall. Raj, good to see you as always.
Thanks for having me.
Now let's start with a flag.
Yep.
This is a short-term pattern, right?
Yes.
How does it work?
Okay, so we've got a BHP chart, and it's kind of when the market moves into a consolidation zone and you want to look for directionality of where it's going to break out. So on this chart here we've got various different kinds of flags and how I've personally looked at them to see if the market will continue with this trend. So this market's clearly making higher highs and higher lows and pushing up, so it moved from about 1,000 all the way past 2,000, and during that period of time from 2017 onwards we had a lot of patterns and they worked quite successfully, so I wanted to bring this up for you.
Okay, so let's start with the bull flag then. It's a downward sloping pattern and it's a consolidation pattern.
Yep.
And it's a continuation pattern. So
Correct.
The market's moving higher, the flag moves a little bit lower, and then we expect it to break out.
Correct.
How do we recognize it?
Okay, so it kind of puts itself into like a channel consolidation,
Right.
moving lower. So in a period of an uptrend, you'll see some lower highs and lower lows, and you'll kind of be able to push the set of them together to make this kind of channel. And it does kind of confuse the markets because it's moving downwards and it's called a bull flag. But when you see the break to the upside, it's often backed by a decent amount of volume, like it is on this particular chart. And we've seen that the move actually matched the length of the whole pattern. So it gives you a decent upside target as well.
So we've got two parallel lines and that makes it look like a flag with the flagpole.
Correct.
Tell us, how do you work out the minimum target?
So generally, with the way I trade and the way that I generally would look at the markets, I would take the top of the flag as the first target. So as soon as we get in the high end, it makes the consolidation period on the way down. So that would be the first one. But to be honest, I would try and let these trades run as long as possible and just manage your stop positions as you're moving on. And if you do feel quite bullish on the stock or on the asset class you're trading, maybe even compound.
Okay, so let's move on to the second pattern here. We've got the classic triangle. Now, triangles are quite common. We get them in continuation patterns and reversals, and there are different types of one.
Correct.
This is a symmetrical triangle.
Correct.
How do we recognize that?
Okay, so what happens is, again, we might see either a period of profit taking or some fundamental news might come out that means the market might consolidate, or it could be based on the underlying asset. So in this particular example, it could be based on copper or iron ore prices. But as we had a sideways pattern moving across, we saw a breakout to the upside. But the reason why I really like this classic triangle pattern is because the bottom of the trend line of the pattern was then used as support for another move higher later on. So not only did it break out of the original triangle pattern, it came down, retested the full pattern again, and then pushed much higher later on towards June.
So for symmetrical triangles, are they always a consolidation pattern, or can you get reversals as well?
You can. So if for example, they break to the downside, what I would look out for is the bottom of the pattern, whether that acts as resistance as price comes back up to test it. I would definitely use that as a scenario for a trend reversal.
So for a symmetrical triangle in a rising market, it's the lows that matter.
Correct.
In a falling market, is it the highs?
Yeah, I mean, generally the whole pattern is very, very important. But if it is going to reverse and move down, you want to see a break of the low. If it's going to push back higher and continue with the trend, you want to trade it on the break of the pattern on the top side.
So how many touches of the triangle, either on the upside or the downside, do we need in order to make this a valid pattern?
Yeah, I mean, I would consider 3. So like in this example, we've had 3 touches on both the top and the bottom side for us to realize that it's actually working and it's correct. If you want a weaker pattern and a lesser signal, 2 is the bare minimum, but 3 and above means will show that this basically has more importance.
And obviously this triangle is moving towards the point or the apex.
Yes.
Does that mean that the pattern loses momentum?
Yeah, I mean, it's not an exact science. I mean, there are times where probabilities dictate that it can go to the end of a pattern and just keep consolidating. But normally you'll kind of see traders get more jittery and you'll see the volume change in that period of time. This is why we've got the volume indicator at the bottom. So when it does break out, if you do see the market moving behind it, that's a confirmation signal for us.
Okay, let's move on to the next pattern. This is channel down. Yep. It looks very similar to me to a bull flag.
Yes.
What's the difference?
Okay, so this is a weekly chart. I actually drew the pattern on a daily chart. So if, for example, you zoomed into this chart and had it on a daily, it would just look like a channel formation, a normal channel formation.
Okay.
But as you pull out of the chart, you can see it's a downward sloping channel, very similar to a bull flag and probably pretty much the same. But the fact is that we've used a previous high as well for an internal trend line to come in for those 3 touches to secure, to see how important that internal trend line is. It bounced off it good 3 times and pushed higher from there.
So again, this is a continuation pattern.
Agreed.
We had a move higher into this pattern, it then drifts lower, and we're looking for a move out on the upside.
Correct, yes. And the good important thing about this one is that the volume has really backed this move, and it moved from about, I suppose, 1,500 all the way up to 2,000 off the back of this one pattern alone. So it shows you that I wouldn't really place any more significance on the individual patterns. What I would place more significance on is how they break, the velocity of the break, and whether the market's behind them.
So just as a rule of thumb, higher volume, say on a move higher, and less volume on a move lower would suggest that momentum is on the upside.
Yeah, and also you notice a little couple of patterns when markets start to top out. So on the end of this chart, so coming towards June, towards 2020, you've seen that the market push higher and higher and meet some kind of resistance just above the 2,000 level. If you look at the volume indicator at the bottom, you can see as the market's pushing higher, the volume's wearing thinner. So that's an indication in itself that the market isn't really backing this continuation move all the way up past 2,000.
Gotcha, so it's going to struggle to reach new highs with less and less volume.
Basically, yeah.
And finally, let's have a quick look at a falling wedge. Now, I always find this pattern a bit confusing because it can be a continuation and it can be a reversal, and it's sloping downwards in this instance, but this is a bullish wedge. Yes,
so it is quite a strange one because it's pulled off quite heavily. So you can see there's a gap down which was filled on the chart. So we're not talking about gaps today, but there was definitely one there. And the fact is that the market must have sold off there. It could have been fundamental news, it could have been earnings. We're not really too bothered about that because we're looking at technical analysis today. But because it was so steep, it gave us this falling wedge pattern which was quite close, and the apex was getting quite close towards the bottom. But as you can see, it broke out again on decent volume, but it also retested the pattern to push higher again, and now it looks like, you know, holding above 1,600 is quite certain here.
So just to be clear, what's the difference between a symmetrical triangle that we were looking at before, that classic triangle on the left, and a falling wedge? Because that also is in a kind of triangle formation, isn't it?
It is. I mean, they're all patterns, and I would explain to anybody watching that it's the probability of the patterns working out. That's what really works. They're all continuation and reversal patterns depending on which way they break. The bull flag is only called a bull flag because it broke higher and it pushed past in to test that. It could have continued down and it would have been a channel. So you only really know what the pattern's called on the subsequent break, which can be a bit confusing for a lot of people, but it confirms the pattern if it breaks, depending on the direction that it goes in.
So that's where you look to make your trade once you see the breakout?
Correct,
not before?
Yeah, so either on the break, which I'll probably take maybe half or a quarter position on the break, but some of the times it comes back to retest the pattern. If it does come back to retest the pattern, then you can add to the position and wait for the break past where your original entry was to either add to the position or manage your stops or whatever you want to do with your money management from there. But all of these patterns, they're based on probabilities. They're not an exact science. No. You kind of have to be very good to spot the trend lines and how many times that the resistance and support levels are being hit by the price action.
And just finally, with the falling wedge, a falling wedge is bullish, it tends to be. A rising wedge tends to be bearish.
Yes.
So it's a triangle that's sloping downwards. That's how it differentiates from a symmetrical triangle, is that right?
Correct, yeah, because if it's a rising wedge, what you're kind of seeing is the market exhausting itself. The waves are getting closer and closer together, and that can be seen as it being slightly unsustainable. Obviously, you can use other things to help you, maybe like an indicator to see if there's a divergence or something like that there. But if the waves are getting closer and closer together, coming higher up, it looks like the market's kind of squeezing and exhausting that move, so yeah.
Okay, now I know you've got a few real-world examples for us. Let's start with this one, which is an ascending triangle, so slightly different to the symmetrical triangle and the wedge that we were looking at before, and it's characterised by this flat top and then higher lows.
Correct, yeah. So the market was making higher lows, and it has been in this sector for a little bit of time. So we've seen a good break here on National Grid and also CNA, the ticker for there, so Centrica. So we've seen a break to the upside on both of them. Now, the important things here are the targets, because it's quite a big, broad pattern anyway, and then we're coming up to the psychological 1,000 level. We're seeing a break up. We've seen volume move down slightly, so I'm just really kind of interested to see how much of this market's back in the move. But I would say this is a weekly chart, so that weekly candle hasn't closed yet. So we need to see what happens at the end of this week.
So typically, is an ascending triangle a continuation pattern or a reversal pattern?
Again, this one could be both. So if it does break to the downside, I very often see it come back to retest the pattern and then move again. So this can work either way. On this particular time, it's moved up, it has come back to retest and is moving higher again.
And where do you measure from if you're looking to get a target from the breakout?
Yeah, so you've got the potential measurement from the bottom of the pattern to the top of the pattern. So
is that here?
Yeah, so like
to the top.
So the low of this looks around near 720 mark. The top looks up to be around the 900 figure.
Got it.
So what you do is you'll measure that pattern, and a good risk to reward target is 2 to 1 and above. So you really want to aim for 3 to 1 risk to reward on something like this, but that would lower the probability of success. So there are different money management techniques to manage that.
All right, let's move on to another chart here. This is gold, and we've got a real life example of 2 bull flags. Talk us through them.
Yeah, so gold is a really good chart technically, and it worked quite well with technical analysis in general. So I wanted to point out the March to May kind of bull flag formation, and it pushed higher from there, and it really hasn't looked back since. So around 1280 and all the way up to 1560, and if you manage to trade this pattern with a very good risk to reward, because the actual size of the pattern isn't that steep, and it really did push higher from there. And then I don't like to really talk about charts without giving current examples. So now we've got a bull flag set up, and we're at the bottom of this channel now, which makes it even more interesting from my perspective, because a break higher would mean that it'd have to trade above the 1500 level.
Right, okay, brilliant. And finally, this is a real world example of some symmetrical triangles.
Yes.
And this is kind of showing that it doesn't always necessarily work out as planned.
No. So this is copper, and at the moment we're seeing trade news headlines on a day-to-day basis. So it's a really, really choppy chart to trade. And you can see we've got some good successful examples at the beginning. But then at the top, so around 2018, leading to the beginning point of 2018, there was a really bullish example of a break to the upside. And the sad point from our point of view as technical analysts is it did have good volume behind it, and it looked like it was going to break higher, but it just absolutely stopped at 325 and broke lower to kind of where we're trading today to find some kind of support around 250.
Raj, thank you so much for everything.
Worries.
That was technical analyst Rajan Dhall talking us through continuation and reversal patterns. I'm Victoria Scholar, and thanks for watching IGTV.